So basically, what are futures? Now, ignore the terms that every futures contracts have because I don't want to confuse you. For beginners, let me explain to you this in super simple terms. So basically, futures, if you look at a lot of the definition online, they are standardized contracts. And the keyword here, standardized, means within a contract are various requirements for you to buy or sell the future. So ignore that for now. Just understand that they are standardized contracts to buy or sell. An asset can be a commodity, stock index futures, forex futures, at a predetermined set price. In the future, as the name suggests, you agree to deal with that person in the future, okay? Now, when I studied this in university, there's like a whole chapter, in fact, a couple of chapters about this, in fact, a whole book just about futures, okay? Ignore all those crazy complicated stuff for now, because futures is basically just this one thing. Let's say today, this is you, okay? And your ex, okay, not your ex, your friend. Because when you put your ex into the equation, you won't even meet him or her at all. So let's say you and your friend today decides to meet, and then both of you love apples, okay? Your friend has a lot of apples and you ran out of apples. So because you know that inflation is coming up, then grocery prices are going to go up. So you tell your friend, okay, let's make a good deal, okay? You tell your friend, I want to buy apples from you 1 month from now. Meaning next month, I want to buy apples from you. But I'm scared that the price is going to go up. So can we just agree on the price today? Sure, let's make a good deal. In 1 month from now, I'll sell you an apple for $1. So I have 10 apples, so you can just pay me 10 bucks and we agree on this. Okay? Agree on the amount, agree on the price today. So basically, even though you don't get any apples today, your friend doesn't get the 10 bucks from you today, but you both entered into an agreement. So you both entered into a contract. To put in simple terms, this is the futures market. Okay? A contract. It's almost like you want to go to Japan 6 months later. Okay? With every trip, you pre-book a trip well in advance, right? And right now, there's a discount in the Japan tour package. So you tell the tour agency, you know what? In 6 months' time, I'm going to Japan. I'll buy this package from you today. Okay? You put a little deposit, okay? But the full amount you pay on a future date. So you and the tourism company got into an agreement. So you signed a contract. Yes, I'm going on a Japan tour. You put a deposit, and in the future, I'll pay you the price. And in the future, the company, the seller, will deliver to you the service. This is also just like a futures contract. So basically, if you study finance in school or university, futures will be classified under derivatives. Basically, look at this first few letters over here. The value of futures is derived from an underlying asset. So it can be commodities, futures, can be index futures, can be currency futures. Okay? Basically, stock market index futures. Futures originated from commodities market. Many centuries ago, farmers get into an agreement so that their crop prices, when they sell it, wouldn't go down too much. But nowadays, because of so many retail traders coming in, the more popular market is stock market futures, currency futures, interest rate futures too, which are classified under financial futures. So just like any contract, like I said just now, a futures contract is basically just an agreement. And this agreement consists of the underlying asset. What are you going to exchange? And in just now, the example, we are going to exchange apples, right? And every futures agreement has a specified contract size. And just now, what is agreed upon? 10 apples. And also, every futures agreement has a delivery date. Think of it like your friend delivering the apples to you. And also, every agreement has a price. He is going to sell it to you for $1. Once you sign the contract, it is set at that price, $2,000, that's it. They cannot be like, last minute be like, oh, you know what, there's inflation, let us increase the price. Cannot. And of course, there are other things like margin requirements, price limits, expiration dates. Those are the side things, but these are the main things you need to focus on for now, because I don't want to confuse you too much. So basically, when you buy futures, you are going into a long position. It's just like your normal currency trading, stock trading is the same thing, okay? Basically, you're committing to buying at a future date. Now, the good thing about having a long position in futures is that if you study finance, you come across this graph, okay? So basically, you have the payoff over here, then price at maturity. This for those who want more technical stuff. If you want the simple stuff, you can just skip this part. So this is the delivery price, meaning the price on the delivery date. So if you have a long position, the graph goes like this. To put in simple terms, when you have a long position, you have unlimited profit potential, okay? But your downside is limited to the delivery price. If on the day when your friend delivers the apple, and today is the delivery day, okay? And the spot price is higher than the price in which you bought the futures 1 month ago, then you will earn a profit. But if the price today is lower than the price in which you bought the futures 1 month ago, then you lose money. It's the same with trading. You bought $1 at 1.0000, 1 month later it rises to 1.0050, for example. Then you make money. It's very simple to spot trading, meaning the normal forex trading, normal stock trading, just that the underlying things are a little bit different. So this means that if you have a short position, then the other way around, you're committing to sell at a future date. So let's say you bought $1 today at 1.0000, then 1 month later the price goes down. What's going to happen? You're going to make money. If the price goes up, then you are going to lose money. And if you're a beginner, even for pro traders, okay, try not to do stupid things that is not in your favor. Because if you short, it's just like shorting a stock. Let's say again, this is price at maturity. And this is delivery date. Alright? Your payoff graph goes like this, meaning that your profit potential is limited, but the price can go up to the sky, meaning that your losses will be unlimited. Because think about it, it's like a stock. It's like a stock. What's the lowest that a stock can fall to? 0, right? So if you bought a stock at $10, the most worst thing that can happen is the stock falling to $0. It's worth nothing. It cannot fall to -50, -20, right? So if you short this stock at $10, this is your profit potential. But what if the stock goes up? It can go up to 20, 30, 40, 50, 60, 70, can even go up to 1,000. So your potential for loss is unlimited. So try not to short futures. There are better things to do, like not trading at all. There are a lot of things that you need to know too, like what moves the futures markets, what trading platform should you consider. If you want a video on that, let me know. By the way, I make content for my supporters. There are some of you who just come and complain Like you paid me money when you did not. Did you pay me? Even kids on my channel don't act like that. Anyway, if you want a detailed video on how to start futures trading, let me know. But the most important thing for now, if you're a beginner, is to learn the basics first. Learn how the futures market works first. If you want a detailed course on this on YouTube, again only for my subscribers, not those stupid clowns, let me know. Then I'll make a free course to put on YouTube. And if you want to get started in futures trading but you got no money, no capital, then you can join a futures trading prop firm. So the futures prop trading firm you can consider signing up for is Apex Trader Funding, and they have various account sizes, and they've been giving payouts to futures traders who join them for the past entire year. So let me just show you over here. And you can see that for the past 90 days, they paid out a total of $52 million. And right now, you can actually trade using NinjaTrader, which you probably already use. And you can also trade using a simulator account just to practice things before you get started. And you can do this on NinjaTrader. So if you want to sign up for this prop trading firm, I'll put the link down in the description below, as well as in the pinned comment. And because, like I said just now, futures are derivatives, okay? So if you choose to trade stock index futures, then you need to study the underlying asset too, meaning the stock market. If you choose to trade currency futures, then you need to study how does the currency market works. Don't skip the learning step, okay? Skip the learning, act entitled, you're gonna pay the price in the future. Because why do most people lose money in the stock market, in forex market, futures, options? They skip the hard parts. Who is going to spend $1,000 to $2,000 to buy courses, to buy books, to spend 1 year studying, when you can use all that money to travel and have fun, and then try to gamble the futures market, options market? That's why most people lose. They're not willing to put in work. If you want more futures video in the future, no pun intended, let me know. And I'll talk to you soon next video. Bye.